Life insurance is one of the most important financial tools for seniors, but one factor plays a bigger role in determining the cost of coverage than almost anything else: your age. As we grow older, our age bracket has a direct impact on how much we'll pay for life insurance, what options are available, and how affordable coverage really is. In this video, we're going to explore the impact of age brackets on senior life insurance rates. We'll break down how insurers evaluate age, why premiums increase as you get older, and what you can do to find the right policy at the right time. Whether you're in your 50s, 60s, 70s, or beyond, this guide will help you understand your choices so you can protect your loved ones without overspending. Let's start with the basics. Life insurance companies price policies based on risk. One of the most important risk factors is age. Simply put, the older you are, the higher the risk that the insurance company will have to pay out a death benefit sooner. This means that premiums increase steadily as you move into higher age brackets. Age brackets are essentially ranges of years that insurers use when setting prices, such as ages 50 to 59, 60 to 69, and 70 and above. Within each bracket, the cost of life insurance is significantly different. So why is this important? If you're considering buying life insurance as a senior, knowing where you fall in these brackets can help you understand what you're likely to pay and why. Let's look more closely at how different age brackets affect life insurance rates. For seniors in their early 50s, life insurance is still relatively affordable. At this stage, many people are still in good health, and insurers see them as lower risk compared to someone in their 60s or 70s. Premiums will be higher than for younger adults, but policies like term life insurance or whole life insurance can still be obtained at reasonable rates. The key here is that the earlier you apply in your 50s, the better your chances of locking in lower premiums for the duration of your policy. Moving into the 60s, things begin to change more noticeably. Insurers know that people in this bracket face more health challenges and statistically have fewer years ahead than those in their 50s. As a result, premiums increase significantly. Many companies start limiting the length of term life insurance options for applicants in their 60s. For example, instead of being able to buy a 20 or 30-year policy, you might only qualify for a 10 or 15-year term. This means your options shrink as you move into this age range, and the cost of coverage rises sharply. If you're in your 60s and considering life insurance, it's crucial to act quickly, because waiting even a few years can make coverage far more expensive. Now, let's talk about the 70s. At this point, life insurance becomes much more expensive, and options become more limited. Some companies may not even offer term life policies past a certain age. Whole life insurance and guaranteed issue policies are often the only available choices. Premiums in this bracket can be very high because the risk to the insurance company is at its peak. However, many seniors in their 70s still choose life insurance to cover final expenses, pay off debts, or leave a financial gift for their loved ones. Guaranteed issue life insurance, which doesn't require a medical exam, can be an option, but it usually comes with lower coverage amounts and higher costs. Once you move into your 80s and beyond, life insurance options are extremely limited. Some companies stop offering new policies altogether, while others only offer small final expense policies. The premiums are the highest at this stage, and coverage amounts are usually much smaller compared to what you could have secured in your 50s or 60s. For many seniors in this age bracket, life insurance is more about ensuring loved ones aren't left with financial burdens for funeral costs, and less about large financial protection. So, what does this all mean for you? The biggest takeaway is that buying life insurance sooner rather than later can save you a lot of money. Locking in a policy in your 50s or early 60s gives you the best chance of affordable premiums and wider options. Waiting until your 70s or 80s means you'll pay much higher rates and have fewer policies to choose from. But age isn't the only factor. Health plays a major role too. If you're in excellent health in your 60s, you may still qualify for better rates than someone in their 50s who has significant health issues. Insurers look at age and health together when setting premiums. This is why it's important to apply before major health problems arise, because once they do, coverage becomes more expensive or sometimes unavailable. Now, let's go over a few tips for seniors who want to keep life insurance costs as low as possible, no matter their age bracket. First, compare multiple insurers. Different companies have different ways of evaluating age and health risks, so shopping around can lead to big savings. Second, consider the type of policy carefully. Term life insurance is usually the most affordable, but it may not be available past a certain age. Whole life and guaranteed issue policies are more expensive, but may be your only options in later years. Third, buy coverage as early as you can. Even a difference of 5 years can mean paying hundreds or even thousands more in premiums over the life of a policy. Another smart approach is to calculate how much coverage you really need. For many seniors, the goal is not to replace income, but to cover specific costs like funeral expenses, medical bills, or small debts. By choosing a smaller coverage amount, you can keep premiums more affordable while still providing financial security for your loved ones. It's also worth mentioning that some insurers offer senior-focused policies designed to be easier to qualify for, with simplified underwriting or no medical exam. While these come at a higher cost, they can be a valuable option if health concerns prevent you from getting traditional coverage. So, to sum it all up, the impact of age brackets on senior life insurance rates is significant. Premiums rise with every bracket: 50s, 60s, 70s, and beyond. The earlier you secure coverage, the more affordable it will be, and the more options you'll have. Waiting too long can limit your choices and dramatically increase costs. However, with careful planning, comparison shopping, and realistic coverage goals, seniors can still find policies that fit their needs and provide peace of mind for their families. If you're considering life insurance as a senior, don't wait until the next birthday or age bracket. Every year counts when it comes to locking in the best possible rates. By understanding how age impacts your premiums and planning ahead, you can make smart financial decisions that protect both your budget and your loved one's future. Thank you for joining us as we explored the impact of age brackets on senior life insurance rates. If you found this video helpful, be sure to subscribe for more insights on finance, insurance, and planning for your future.